right now, and then we wait for a few more people to come in and join us as we go along. But hi all, and welcome to another edition of FxPro, What's Moving the Markets webinar. My name is Phillip Konchar, and I will be your presenter for today's event. So if you need to get hold of me, my contact details are on the slide already. That's philip@tradercast.com, or you can speak to your account manager and they'll point you in the right direction. So let's just move on very quickly and go to the important bit. And if you've seen any of the live webinars or market analysis webinars done by anybody else or done by FxPro in the past, you know that they all start with a big disclaimer. So basically, if I do get excited a bit and start talking about some levels or prevailing trends and support and resistances or anything that might be moving the market from the fundamental data point of view or economic calendar or figures or announcements, anything like that, I just want to ensure that you don't consider it to be advice. Basically, you take it with a pinch of salt. You make sure that you understand that it's non-advisory, and FxPro are your execution-only brokers. Test. Is audio okay? Can you hear me? Test. Can somebody confirm that this is up and running, please? Yeah. Well, John, make sure you have your John, check your speakers and volume. If you can hear me, then yeah, I can see that audio is going through. Okay, apologies, guys. So basically, FxPro are execution-only brokers. They're not here to give you advice and so on. Now, going back forward, this is me, and what I'm trying to say is holding message. Holding. Is that better now? Okay. Apologies. Okay, so basically what I'm trying to say, these are my opinions and experiences. They're not advice. Any material that I provide here, anything that I talk about here is not investment advice, and it should not be seen as an investment advice. It's available in a public domain, and as such, it does not take in consideration your individual circumstances and your trading or investment objectives. Few golden rules for new traders. I'm going to run through these very fast, and then we can go into a live markets. Never add to a losing trade. Never lose more than 1% of your trading capital at any one trade. Never trade anything you don't understand 100%. If you don't know what it is, don't trade it. You don't know what the leverage is. You don't know what the spread is. You don't know what's moving it. Don't touch it, because it's likely that your decision might not be as good as if you trade something that you really understand. Trade in the direction of the trend in your trading time frame. We all have different time frames. Make sure that you know what is your trading time frame and what is your analysis or a trend confirmation time frame. Only look for low risk, high reward trades or high probability setups. When you don't have signals, don't trade. So you can be long, short, and cash. Cash is also position. And the idea is that we go and look for a disproportionate amount of reward for the risk that we are willing to take. Trade your plan, your system, your signals, the chart, and price action, not your opinions, bias, or prediction. Fairly self-explanatory. Most of the people, they believe that they know where the markets will go, and even if they're right, markets can stay irrational for so much longer than anybody else can stay solvent. So make sure that you don't trade what you believe, instead trade what you see. Sorry, guys. Just somebody asked a question. Here we go. So find your trading methodology that fits your personality. So what do you do? What is your work-to-life balance? When do you have time to go and look at the screen? When do you analyze the markets? Is it over the weekend? Do you trade in end of day, or are you more active during the day, and so on and so on? Make sure that that all works. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. Really, really important. You must state who you are, what you do, what you trade, how much you're willing to risk, and what are you hoping to gain. You also have to state what is the confirmation for your decision to enter into a trade. The size of your winning and losing trades determines your trading success. Fairly simple maths. So it's not how many times you were right or wrong. It's not the hit rate of your trading system or a strategy, if you want to call it that way. It's actually how much did you lose when you were wrong and how much did you make when you were right. If you are right 30% of the time and wrong 70% of the time. But when you lose tenors and 20s, but when you're right, you're making hundreds and thousands. It's still a valid trading setup, because from the risk to reward ratio, you're risking very little. So the idea is that your trading strategy has to be accompanied by very aggressive appropriate risk and money management strategy. The risk management rules will determine the success of your technical trading system. Fairly self-explanatory. One last slide. If you need to contact your account managers, these are the telephone numbers, UK and Cyprus as well. And going back to the beginning, as we said, if you need to get hold of me, it's phillip@tradercast.com. Alternatively, go and speak to your account manager and they'll point you to the right direction. Now, this is the boring stuff over and done with. Now, what I would like you to do, guys, it's a fairly small group, so make sure that you ask questions. Make sure that this is informal webinar. If you want me to cover anything in particular, or if I'm saying something and it's not clear, make sure you ask. Because if you do, then loads of other people are probably thinking about the same thing as well. So I am going to cover the popular financial trading instruments today. So we are talking about S&P here, Dow Jones, DAX, FTSE, gold, crude oil, euro dollar, sterling dollar, dollar yen, euro sterling, Aussie dollar, and dollar CAD. These are all 1 hourly charts, and what I'm hoping to do is I'm hoping to go into each one of them and then drill from a longer term time frames into a shorter term time frame and identify some prevailing trends and also some important levels, tradable levels, or levels for support and resistance, supply and demand, levels of interest that are probably watched by many other traders using all sorts of different strategies, and you should be aware of those because they would help you identify the trend. And the idea is that if you trade in the direction of the prevailing trend, you are increasing the probabilities of potentially being right. Now, before I do any of that, I do want to go into the economic calendar. And before I even go into the economic calendar, I would like to introduce you to something that's called FxPro blog. And FxPro blog is free to access website. It's blog.fxpro.co.uk, or just go to Google and type in FxPro blog and hit enter. It will take you to that site. We're publishing loads of daily analysis. Some of them are technical analysis, some of them are more fundamental, and so on. But they're very, very useful, and they would help you and prepare you or in regards to what's coming up today, or within the next few days, or in this case, a whole week. Because this was published on Sunday evening or Saturday, on Monday morning. So from the economic calendar point of view, it's very, very important that today we pay attention to these few events here. And I won't bore you with those because they are already in the report. But we had Australian Consumer Price Index earlier, and I'll go into the economic calendar and show you that. Then what we had is we have a Eurozone unemployment rate in the afternoon. In about half an hour or so, we are getting US ADP employment change. Basically, this is the indicator of unemployment situation in US, and as such, it impacts the non-farm payroll number that we will get on Friday. And then we are getting crude oil inventories, which might move WTI, Brent, and also commodity currencies like Canadian dollar. That's coming up at 3:30. And today is finishing with a very big crescendo with FOMC rate decision and monetary policy at 9 o'clock, and then we are moving on to Friday. So to go into the economic calendar, and yet again, FxPro economic calendar, overnight we got Australian data, which came in slightly worse than expected, 0.4 versus 0.5, 1.9 versus 2 for consumer price index. And then we got this Eurozone unemployment rate, which came in at 8.7, in line with expectations, 1.3 for CPI, in line with expectations. And that was actually seen as a fairly bullish for the euro. Euro reacted quite nicely to that, and also that data from Australia prompted Aussie dollar to stay bullish from the intraday point of view, and this is probably more to do with the dollar weakness than anything. So I can see the question. Can you please provide some insight on the correlation for DAX? I believe it's inversely related to euro. Yes. If so, does that mean that it is also positively correlated to dollar? I would stick with euro. If you have a stronger euro currency, DAX reacts in a negative way. So it's a fairly mechanical situation here, and I'll talk about it in a bit more. So there is your euro and there is your DAX, German DAX. Both are very, very liquid products and frequently traded. They're both in 1 hourly time frame here, but you're seeing that euro is bouncing off these lows and hitting above 124 area, which is that nice psychological number that we were talking about last time. And then we are seeing this selling pressure in German DAX. So the logic is if the euro currency becomes stronger against the basket of other currencies, including dollar, that means that German exports are becoming more expensive and therefore less competitive. So therefore the German index is pushed down. And I'll talk about euro in a minute. So that's not a problem at all, because we were talking about that a Eurozone, apologies, we were talking about that Eurozone unemployment, which is driving the euro forward. The other thing that I am watching from the economic calendar for the rest of the day, we have API data, which is this one here, that's coming out at 1:15 UK time, and this will drive US dollar, and this will also drive US equity indices. This is the indication and the measure of the change in the number of employed people in the US. And this number is closely watched as an indication for what might happen on Friday with non-farm payroll. So the consensus for today's number is 185,000 jobs created for the previous month, i.e. January. In December number, we got 250K, which was much better than anticipated. So it was a big beat to expectations, and as such created this positive reaction in US equity indices. So this number will be closely watched. Thank you for asking. Thank you for asking. Oh, I can see that you registered for TraderCast as well. Unfortunately, I was speaking to FxPro, we couldn't find you. So I don't know if you speak to your account manager and ask them, or you can just set up, sign a trial for TraderCast. It's up to you. But yeah, I could see your registration, but I didn't activate it because we couldn't find you. Sorry, just going back to what we were talking about, and there's a couple of very good questions here as well. Michael is talking about shorter term timeframes. Blaine is saying, yes, it's Blaine, these webinars are recorded and then they're uploaded onto a YouTube, FxPro YouTube as well. So you're more welcome to go to YouTube, type in FxPro, and you'll find it there as well, probably with maybe a day delay or something, because it needs time to render. But yeah, so very important data coming up at 1:15, which will drive US dollar, but also US equity indices. And this is a forecast for what we might get on Friday as well. The other data that's quite important today is crude oil inventories. That's coming up at 3:30. Not just for the people who are trading crude oil, because this report shows us how much oil was consumed in the last 7 days in US, and how much oil is in the storage. Not just crude oil, but also derivatives like gasoline and heating oil, i.e. fuel, petrol, and also the heating oil, and also gives us the reading for the production numbers, which indicates to us how much oil might be coming to the market, and therefore it's significantly increasing the volatility in crude oil, not just WTI, but also Brent, and not just Brent, but also commodity currencies like Canadian dollar, because they're correlated. And this number comes in at 3:30. The consensus is that we will get less than a million of barrels. In previous drawdown was 1.071 million barrels drawdown, and now we're expecting a build. We're expecting an increase in storage of oil, which is normally considered to be bearish for the price, especially if we see a larger build than anticipated. So supply and demand comes in from, this is from the fundamental point of view. And what I'm talking to you about is, we're talking about the reasons why something might move and when it might move, because the volatility might increase because of the differences and changes in the numbers that are being published, and also the numbers that are going to expected by the market, as such. And then technical analysis will point to the actual levels at which something might happen, and we'll talk about that in a minute as well. Michael is saying, how do I register? It's free for a while, for a trial. Yes, Michael, you go to tradercast.com and you click on sign up, and you put FxPro in the introducer field. When you come to the payment stage, you log out. So therefore, do not leave your payment details. I will have to confirm with your account manager, and if they say that you qualify, you can access it. Yes. but they will need to tell me. Now, the other thing that we are working towards as well is tomorrow. I didn't tell you the most important thing for today is at 7 o'clock. 7 o'clock, we are getting the FOMC rate decision, Federal Reserve rate decision. That's 7 o'clock UK time, and then the monetary policy statement at 7 o'clock. And this will be a closely watched event in relation to the US dollar. And in particular dollar index, but it will have a huge impact and potentially increase the volatility in US equity indices. No change is expected today. The rate is expected to stay as it is, but the statement which will follow that rate decision will be closely watched. This is the last statement and the rate meeting that Janet Yellen will deliver as a chairwoman of Federal Reserve. And any changes in sentiment or hints that the Fed members are becoming more hawkish, therefore they are potentially anticipating additional rate hikes going forward in 2018, in addition to the already forecasted 3 hikes, might impact the dollar strength, US dollar strength against the basket of other currencies. And also it will impact the volatility. So therefore it can be either seen as positive for the US equity indices, which had a nice pullback yesterday, day before yesterday, or it might increase the volatility and trigger a slightly higher correction. But it's around 7 o'clock. It could be a non-event, but normally there is a volatility surrounding this particular event. And as such, it should be closely watched, and you guys should be preparing yourselves in the sense that if you have any intraday positions open, you might try and put your stop losses at the appropriate places to protect yourselves if they are open in a longer term time frame. If they're shorter term time frames, i.e. 15 minutes and lower, maybe it would be prudent to assess the situation, go flat into this announcement, assess the market reaction after it happens, and then decide to re-engage with the market, which will then either confirm the existing trend in your time frame or confirm the trend change in your time frame. But these are the triggers. Very quickly, I just want to cover something else from the economic calendar point of view. Tomorrow, it's Thursday. We are getting a couple of important events as well. ISM manufacturing data in the afternoon around 3 o'clock. That will drive the market's initial jobless claims in US as well. And the big date is going to be on Friday, and the Friday is obviously non-farm payroll day. So just bear with me a second. I'm just going to go down to Friday. Friday, 2nd of February, we are getting non-farm payrolls. So this is the big closely watched data, which indicates the US unemployment rate, average hourly earnings, and also the number of jobs created in non-farming sectors. And the market is anticipating 175,000 jobs created in the month of January. Previous reading was 148. So if we get a larger number than 175,000, let's say 200 or 250 or 260,000 jobs created, then that would normally be seen as bullish for the US equity markets. Therefore, economy is really strong, they're employing people and so on. If we get a smaller number than 175,000 expected, and this is coming up at 1:30. This is just before the US markets open at 2:30 our time. Then potentially that could be seen as a bearish scenario and maybe trigger some consolidation, in particular in US equity indices, and it might impact the dollar. So if the dollar goes up against a basket of other currencies, that might impact gold and also some other commodities traded in dollar. If dollar sells off, then obviously that can impact gold in the opposite way. Gold will go higher, and so on and so on. So it's all very much linked, and it's one of the events that everybody's watching and eagerly anticipating, because this type of event sets the expectations for the trading going forward for the rest of at least for the next couple of weeks, if not the whole month ahead of us. So this is the kind of a dry stuff from the economic calendar point of view. I can see plenty of questions here, guys, but Michael is saying, what leverage would you advise I use as a beginner? You're better off speaking to your account manager at FxPro, and they'll be able to point you to the leverage that's on offer and the leverage that you should be using. I'm here to talk to you about the markets rather than the leverage as well. But as a rule of thumb, when you are new, when you're learning, try and use smaller leverage, because it means that your losses might be smaller while you're going through this process of learning as well, and it will keep you solvent until you figure out what works for you, what's your trading style, what's your trading time frame, and so on. Trading is not something that you can learn overnight. It takes time, it takes dedication, and it takes investment from you in the sense that you really need to structure yourself in a way that you're treating this as a business rather than a hobby. You wouldn't start any other business, you wouldn't do anything without properly familiarizing yourself with what it is. So speak to your account manager at FxPro, and they'll be able to help you out with that. Now, let's go and start with a couple of important things. First thing that I want to talk about is, we talked about Eurozone unemployment, and I'm going to start with this. Guys, this is a euro dollar, and I'll quickly run through a few currencies and then go into the equity indices, because I think that's kicking off very nicely right now. So euro dollar in a daily time frame is really nicely uptrending. It's really nicely uptrending. So in order for us to identify some levels of resistance, we really have this current high here as a level of reference. And then in addition to that level, we have a couple of other levels up here which could be of interest as an upside resistance area or the zone. I would also take fib from this swing high of 139 from May of 2014 all the way down to this current low, and this is giving us a 61.8 fib retracement. Guys, this is a weekly time frame, so it's a really long time frame. You cannot trade in this. You're more of an investor and position holder, but the only way for us to identify what levels might offer some resistance on the upside is if we have something to look at to the left side of your chart, i.e. the past. And obviously this zone here is now identified as a potential resistance area that we should be keeping an eye on. From the daily point of view, euro dollar is uptrending quite nicely. We have price action trading higher above 20, 50, and also 200 period moving average, and it's supported by this rising. So apologies, I have my squawk coming in. Towards the end of the webinar, I'll try something else. I'll try and switch the camera on, and I don't know if you can see the camera and you can see the desk. So maybe we can do that in the future, but I'll try towards the end just to see if that works. Now, so the daily is nicely uptrending, creating a sequence of higher highs and higher lows. The price action is trading above 20, 50, and 200 period moving average. We have substantial dollar weakness, and we'll talk about dollar index in a minute as well. So the upside resistances are pointing to this weekly area of 125.27, 125.70, 125.97 on the upside. 4-hourly time frame is also pointing to a very nicely uptrending market. The trend line is a little bit steeper than the one in a daily time frame, and that's always the case. So what we see here is we are seeing this sequence of this continuation patterns which were developing over and over again, and then we saw the breakouts. So we are either in a process of developing one right now, and if we see the FOMC now, and let me just put this in a context of what we were talking about earlier. Tonight we have FOMC, and FOMC rate decision will impact volatility in the dollar. So if we see dollar weakness as a result of not rate decision, which is expected to stay unchanged, but maybe in the accompanying statement that comes in afterwards, and it's leading market participants to believe that Fed is a little bit dovish, i.e. they might not be in a particular rush to hike rates as quickly as they said, that will be seen as a dollar weakness, and we could see euro breakout and rally higher. If we see the opposite, then opposite will happen. So I'll show you the both scenarios, but from the bullish scenario, this appears to be a breakout and the retest of a consolidation pattern, which is bullish continuation pattern. They happen over and over again, and they give you these symmetrical measured moves. So to give you the example of how this might play out from the bullish perspective, you have 1, 2, 3 touches, breakout, retest, previous resistance, newly found support. Now, sorry, let me just. Okay, so the bullish traders, speculative traders, will take this many points, which is the widest point of this consolidation, and they will extend it up to point where other people might be looking to take profits, which brings us to this high. So that will be a symmetrical move higher at 125, which is, in addition to being a previous high, a nice and round numbers. As traders, we are a dumb bunch. We like round numbers because they're easy to remember. Okay, so what's driving this euro appreciation against dollar? What is your long-term outlook? Suleiman, I thought I've just explained this, but thank you very much for asking. I'll go into more detail here. Now, the other thing that might happen for speculative traders, they might be looking to take this many points from the previous consolidation that we saw here, this previous consolidation breakout, and speculative traders are looking to add that higher, which brings them to this zone here that we identified earlier, which is a 61.8 fib retracement in weekly time frame. So that will be a bullish scenario. That will be a bullish scenario for euro dollar. Okay, now, and there is always alternative. So let's go and look at the bearish scenario. And the bearish scenario would look something like this. So we have a couple of decent supports. Okay, this area here is the first support. Then we have this one, and then we would go down here. So the bearish scenario would look something like this. And yet again, tonight, FOMC at 7 o'clock could possibly trigger something like this. So keep an eye on this area here as a first level of interest. Now let me just change the color of that because it's very dark and I don't know if you can see. Now let's make it like this. So what bears are hoping for or preparing themselves for is, instead of being a breakout and a move higher, they're looking for a sell-off from here because they would see this as a 61.8 fib retracement. So fake out and then a loss lower is what they're hoping for. And this could also be triggered by the FOMC. So if we see the price flush lower and creates a 4-hourly close or daily close below 123.90, 124 area, then something like this might happen. Previous support, now newly found resistance, and then the price could possibly dip lower to test these areas of support to the downside. In this case, this is cluster of the lows, and highs at 123.90, followed by 200 period moving average 123.55, followed by a cluster of these lows 123.47, call it 123.50, followed by 122.95. So you have two scenarios, bullish and bearish. And the trend appears to be bullish at the moment from the intraday point of view. So daily is uptrending, 4 hourly is uptrending, hourly is uptrending, but all of this can change with a fundamental data or something that's been said later on by the FOMC. I don't want to go into any shorter time frame because this is a 15-minute time frame. I don't know how many of you are actually intraday trading, but from the 15-minute time frame, I would be watching that shaded area at 124.40 and this rising support trend line, because if that's lost and we get something like this, that this could be a corrective pullback ahead of that FOMC meeting towards this rising trend line that we identified, 124.10, 124, 123.90, and so on. As long as the price stays above this rising trend line and gradually keeps on moving higher, bulls are in control, and they are looking to push the prices higher. Fairly nicely and clearly defined uptrend in euro dollar, supported by decent unemployment data in eurozone and also dollar weakness. Now let me just go back and close this. Was this all okay, guys? So what I want to show you as well, I want to show you this. This is dollar index. Oh no, this is dollar yen. Sorry, apologies. Dollar index. This is the one to watch tonight at 7. If you don't know what it is, guys, this is dollar index. This index follows the movement of US dollar currency against the basket of 6 other currencies, against Europe, against sterling, against Swiss, against Japanese yen, against Canadian dollar, and Norwegian krona. The reason why it follows the movement of dollar against these currencies is sterling used to be a former world reserve currency. Euro has the volume of money in circulation. Yen, obviously, because the second most liquid currency pair, frequently traded currency pair, is dollar yen. Swiss because of their neutrality, Canadian dollar because they're North American neighbors and they also considered to be a commodity currency. Norwegian krona because they're rock solid, they're sitting on gold and oil. So this index follows and indicates the overall dollar weakness or strength, and you should be paying attention to this even if you're not trading this, because this is traded in futures, so sometimes spreads can be a little bit wider, but this will indicate to you what euro dollar might do, what cable might do, what dollar yen might do, and so on. So basically, if dollar index is falling, it's likely to be seen as a bullish indication for euro dollar, for sterling dollar, for Aussie dollar, anything dollar. If dollar index is falling, it's likely to be going flat or higher. If dollar index is rallying, then that's normally seen as bearish for euro dollar, bearish for cable, but bullish for dollar CAD, bullish for dollar yen, bullish for dollar Swiss, and so on and so on. But also closely watch for gold and silver, for copper, for crude, other stuff as well. Okay, now, so what's happening here, guys, is this is downtrending in multiple time frames, and we have some very important levels below us. These are 9-month lows, 9-month lows in dollar index. The initial support is at 88, followed by 87.40, followed by 86.60. These 3 levels are hugely important support to the downside. This is daily time frame. Now, I don't want to be cheeky, but is this uptrending or downtrending? It's downtrending. Although Federal Reserve is saying we'll hike rates 3 times this year, it's almost priced in. On the other hand, you have Euro, ECB, Mario Draghi saying we'll keep our policy accommodative. We're still buying bonds. We're still doing QE until September. It might slip into December, and then we'll see what we're going to do about it. And euro is going higher. This is almost indicating that the market participants do not believe that Federal Reserve will carry on hiking rates, and it's almost pricing it in. So a couple of levels to watch from the daily point of view. We have a sequence of lower highs and lower lows, and we have this couple of trend lines going lower. So the levels that I would be keeping an eye on are these lows here as a upside resistance, and then the cluster of these previous lows here. So let me just do that very quickly, and then I'll show you the levels. And this is quite important because dollar index can move 15, 20, 30 points a day, and that's a big move for dollar index. And you can have a euro dollar moving 150, 200 points up or down. So hugely important financial instrument to keep an eye on, and dollar index will likely become a little bit more volatile tonight at 7 o'clock, or just ahead of 7 o'clock, when we get FOMC rates and also statement, because the rate policy in US is driving dollar strength or dollar weakness as we know it. So from the support and resistance point of view, this is clearly downtrending. It's clearly indicating continuous and sustained dollar weakness. Dollar index is currently capped by resistances at 89.40, followed by 89.90 and 90.80, capped by this 20, 50, and 200 period moving average, capped by these falling resistance trend lines. So if we go from the intraday point of view and look at this, this is creating a bearish continuation pattern. We are seeing bullish continuation patterns in euro dollar. We are seeing bearish continuation patterns in dollar index. Now, this doesn't mean that it will definitely carry on falling. Somebody saying something tonight at 7 o'clock or doing something at 7 o'clock tonight will be the trigger for either a continuation of this trend or a trend reversal. That's the reason why these are only the levels at which something might happen. So when we talked about those rules, if you remember, your technical trading system, make sure you understand what your confirmation is, what is your technical trading system, and so on and so on, accompanying it with appropriate risk and money management system. So if I was looking at this from a bearish continuation point of view, then we're seeing that coiling price action here in the dollar index, and this is our support. And let me just color this nice blue so you are not getting confused. I want you to be clear about what we are talking about here. So this is our support. Apologies. My computer is a little bit slow today. It's just the Wi-Fi. So guys, a bearish scenario is that we are seeing dollar index being capped by this negative falling trend line, 200 period moving average and an hourly. Bearish scenario would see this as a pennant or a rising wedge in overall prevailing time frame trend, which is confirmed by daily and 4 hourly. This is hourly. So speculative traders would see this as a loss of support, i.e. a breakout in a direction of the prevailing trend, which is in this case down, a retest from underneath. 234,000 jobs created, much better than expected, sorry. Very little reaction in 175 was the estimate, 185 depending where you go, but very little reaction here in US equity indices and also in dollar. If you remember that ADP number that we were talking about earlier, that's just being published. Now, so let me just go and show you how this works. So this would be the widest point of your consolidation. Added down brings us to a symmetrical move down here, 88.40. 88.40 is the initial downside support. More speculative traders would be looking to take this many points from the previous consolidation all the way down, and if this bearishness continues, this is what they're pointing to. They're pointing to this 87.40, and this 87.40 is also very important because from the weekly and monthly time frames is corresponding to these highs here. You can see selling pressure here, selling pressure here. So when the price breaks out and comes back down, traders, dumb traders, simple traders will be able to remember that number and say, oh, I remember that. I remember I was trading around that number. Something happened there. I might as well check it again. Okay, so these are the numbers that we can remember and so on. So this is your hourly, and this is a bearish scenario for dollar index. Now, if for whichever reason at 7 o'clock tonight we get FOMC and they appear to be quite hawkish and they say, ooh, US economy is doing really well, unemployment is absolutely amazing, we are happy with the tax reforms that Trump is doing, and we are going to be hiking rates not 3 times but 5 times this year. Do you know what will happen to dollar then? It'll just rocket. It will just go higher. Okay, so he might do this. So this is the bullish scenario. So the first level to watch from the bullish point of view is above this falling resistance trend line, 89.40. Breakout above there would negate bearish scenario and potentially open up the way for the retest of these previous lows as a resistance, 89.90, 90, and 90.80, 90.80 on the upside. That's dollar index. Now, let me just go. Guys, do you have any questions so far? Do you have any questions? I do want to cover gold very quickly because that'll move as well. And then I do want to cover maybe S&P or Dow Jones because that will move as well. So, all good? Okay. Now, gold is... will the fact that this is Yellen's last FOMC have any bearing on tonight's sentiment? Michael is saying because it's the last Janet Yellen's. We don't know. It's what they say and how they say it. If they change the syntax in the sentences, if they change the wording, expected wording in their statement, and replace the wording with something that can be seen more hawkish, will be the trigger, or their physical action, i.e. hiking rates when now everybody's expecting for them to keep the rates unchanged. That'll be the trigger. The fact that it's last Janet Yellen's statement does not have a bearing as such. It's a factual, but that's not bearish or hawkish in its own right, if you know what I mean. It's what they say or what they do. Now, guys, this is gold. Gold is nicely uptrending. These areas up here would be the areas of interest if this continuation of the uptrend resumes at 1366, 1377, 1394, 1414. These are the levels that bullish traders are keeping an eye on. From the end of day point of view, this is nicely uptrending, creating the sequence of higher highs and higher lows. The price action is above 20, 50, and also 200 period moving averages. So from the daily point of view, the important level that we should be watching is this sequence of the highs and lows down here at 1339, call it 1340. This would be the initial level of support. So if we see continuous dollar weakness, probably a hawkish hold. Yeah, the expectation, thank you, Michael, for asking. The expectations are that there'll be no change to the rate hike today. Now, gold supported by 1339, 1334. From the 4-hourly time frame and intraday time frame, a couple of nice developments here. We are losing the momentum of this higher highs and higher lows trend line. So the 4-hourly is not as clear cut as it is in daily. And if we go with the same logic, of continuation patterns here and the breakouts, this here could have been a continuation pattern, and it can still be. But the fact that the price action in 4 hourly is below rising trend line, and the moving averages are crossing over here. You have 20 and 50 period moving averages crossing over. So you have a loss of support and retest of underneath, and that's actually clarified by this selling pressure, this wick here in this candle, which is then followed by another red candle as well. So if we are watching this in isolation, I would be a little bit more cautious with gold, because if anything happens with FOMC tonight and we see dollar strength, then gold could potentially dip lower fairly quickly. And I would take fibs from this low to this high to point to a potential downside support. So we have 23.6% retracement. Then we have a sequence of these lows and these two highs at 1326, followed by 38.2 retracement, 1322, and then 1315, and then you have a 200 period moving average at 1310, and then 1300, 1300 going lower. So what bears are potentially looking for is they're looking for a loss of these current supports down here, these current lows. And if that happens, then potentially we could see a little bit more downside pressure to gold going forward. Alternatively, if dollar weakens further and gold breaks out above this rising support trend line, or even this falling negative support trend line here, and stays above here, breaks out, does something like this, then bulls are still in control, and this here was only a fake out or a false loss of momentum, and then this uptrend that we are seeing in daily and weekly is still continuing, pointing to a resistances towards 1351, 1360, 1366, 1376, 1394, and 1414 going forward. So you have both scenarios. So bearish below 1334, potentially targeting downside supports towards 1326, 1322, 1315, 1310. Alternatively, confirm breakout and hold above 1356 appears to be bullish, targeting additional upside resistances towards 1362, 1365, 1376, 1394, and 1414. This is gold, and this will quite likely be volatile tonight at 7 o'clock as well, in relation to what might happen with the dollar as well. So let's talk about this very quickly. I don't know how many of you are actually trading US equity indices. I love to trade US equity indices. I think they're very liquid. And those of you who trade DAX in the morning between 8 and maybe 11 are quite likely trading Dow Jones in the afternoon between 1:30 and 4 o'clock, because this is when these markets move. And we had a substantial moves higher. This is monthly time frame, guys. You have 13, 14 months of this continuous, exuberant, almost parabolic move higher. And in any uptrending markets, from time to time, we get pullbacks, we get corrections. Is this the trend change? Is this the beginning of a new bear market? We don't know yet. It might be, but it doesn't look like it at the moment. It appears to be a correction. It appears to be a correction. So this is a daily time frame, and what I am looking for is the fact that we are creating higher highs, higher lows. We are above 20, 50, and 200 period moving average, and in 4 hourly we are coming to a support levels, still supported by trend line, still supported by the cluster of these lows down here, and also supported by the cluster of these highs. So 26,000 99, call it 26,100 to be precise. So nice and round number. Followed by 26,960, 25,800 down here from the 4-hourly point of view. From an hourly point of view, we will see the gap because yesterday's candle closed lower. So this candle here, and this might be a little bit more too advanced for some of you, unless you've been trading intraday and you understand the gap closes. But this is where we closed yesterday. This is where we are likely going to open today. So when the US traders come to the market, they'll see a gap. They won't be able to see this price. They'll see the price closed here yesterday, but we are opening somewhere up here. And their initial reaction could be to potentially try and push the price lower to test those levels where we closed yesterday, and test the firmness of that support and try and close the gap as such. So what I am looking for today is something like this. This is the hourly time frame, and if the US market stay where it is at the open, we could possibly see a corrective pullback a little bit lower to here. That'll be a big pullback, but it's a possibility, and then a rally from there if bulls stay in control. 26,109. Confirmed loss of that level and the price dipping lower, creating a slightly lower low, would open up the way for a possibility of the retest of that low from underneath as a newly found resistance, and then open up the way for the retest of this rising support trend line in 4-hourly time frame, which is still supporting this trend. It's still supporting this trend, and it's still referencing this cluster of highs and lows, therefore this supply and demand zone. So that would be the bearish scenario. A bullish scenario would look something like this. Either shallow pullback, and then a spike higher, because there is quite a few people who are coming in and they were shorting here. Most of these people have their stop losses up here because this is the gap. So if the price does smash through that barrier of 26,330, 26,360, 26,377, it will likely trigger those stop orders for anybody who has a weak short position here, and we could see a short squeeze and something like this developing. So the US equity markets are still extremely bullish. We could see a correction, but overall, from fundamental data and from the trend analysis points of view, they're still indicative of a clearly embedded and well-established uptrend, supported by 26,100, 25,970, 25,800 to the downside. Upside is initially capped by 26,330, 26,360, 26,377. Confirmed breakout above these levels would open up the way for the retest of further upside resistances towards 26,440. Okay, so we are coming to the end of today's broadcast. We have bearish and bullish scenarios for everything, guys. I am stopping this broadcast now. It was lovely talking to you all. Hopefully you've enjoyed it and you found it beneficial. If you want to come and join us in TraderCast, you're more than welcome to do so. FxPro is sponsoring your access, but you need to qualify. Speak to your account manager if you want to come and join us. they will organize that for you. We have another webinar scheduled for next Wednesday. We're doing this weekly at 12:30. I'm looking forward to speaking to you all again. Thank you so much for all of your questions. I'm going to finish this with a disclaimer again. Yet again, if I did get excited about anything, I'm not trying to advise you. I'm just sharing my excitement with you and showing you where the markets are at the moment, where the support and resistance levels are, and what might trigger them from the economic calendar point of view. Stay safe, happy trading, and thank you for watching, and I'll speak to you all next week. Bye. Bye for now.